Gerald Storch is with us right now. You remember Gerald, of course, the big cheese over at Toys R Us once upon a time, now just a retail Svengali. Gerald, you heard what Kelly was kind of outlining. A lot of these big names are getting out with the big sales, and it just seems to me, you know, earlier and earlier, Gerald. How do you see the season going?
Well, Neil, I'm an optimist just like you are. I always believe in the American consumer and that they're going to spend everything that's in their pocket. And certainly when it comes to Christmas. The problem is there's just not going to be as much in their pockets. And so with rising inflation, particularly in food costs, more and more money is going to necessities. You see the biggest growth in all of retail is in grocery sales for use at home. And so that's going to be the trend as we get to the holidays. And as you know, many retailers have a very tough spring. And so they're saying, well, we're going to get out early, be very promotional. That sounds like that's going to be good news, but it's really not going to be. It means it could be something of a retail bloodbath, if you will, as everyone tries to clear out excess inventory, which is simply a huge problem around many retailers right now, particularly apparel retailers and home retailers. So I think it's going to be one of the toughest Christmases we've had in a long time, Neil. I think I've probably talked to you every Christmas season for probably 15 years. This
no,
may
actually,
be
you and I talked on the very first Christmas. You and I talked on the very first game. You just said, "Oh, the frankincense and myrrh market is awful." but I'm just wondering now, Gerald, what happens? Because if people are stretched, you used to always wisely tell me, when all else is sort of on the line, parents will shop for their kids. To me, it depends on the day with the kid, but I get what you're saying. It sounds like the numbers you're outlining could be pretty bad. So sort of handicap what looks good, what doesn't look good, what items look promising, because sometimes they don't follow what you would think. Like Apple is selling out of these $1,000 plus iPhone 14 models and very important, expensive watches. So it depends, I guess, but play it out for me.
Look, I think anything trendy like a new iPhone is going to continue selling. But apparel is just terrible. Clothing is terrible. It's been bad for a long time. It had a little uptick right after the pandemic, but that's over now, and it's crashing again. It's very, you saw Macy's and Kohl's today hit their 52-week lows. I mean, it's just a terrible time to be in that business, and I think there are major structural problems with the economy as a whole. We kind of have the Fed pushing the brake while the government's pushing the accelerator at the same time in the same car, driving with 2 feet instead of one.
Good point. Very good point.
I don't think we're going to see things get better very quickly. But toys, I've always felt are somewhat recession-proof. But what parents do is they'll buy one less toy, or they'll buy something a little less expensive when times are very, very tough. And again, this isn't the worst it's ever been in history. We're not back in the Great Depression or anything like that. But it's simply not going to work, what's going on right now in our economy as a whole. And inflation is not going to go away until the Fed kills the consumer, because that's the only tool they have. It's like we create all these big problems, and there's structural problems with employment, with energy, with manufacturing, with supply chains, and with the government spending. And we're saying we're going to solve it by raising interest rates. All that does is kind of, twist things around so that people run out of cash, and their credit card rates go way up, the mortgage goes way up. And they simply run out of money, and what do you do then? You buy food. So food's going to keep looking good. If I had to buy one stock, it'd always be Costco, because it's one of the largest grocers in the country, and they offer great value every day, and value becomes the watchword as you get into a tough time.
No, that makes perfect sense. The other issue, and you got into it last time we chatted, Gerald, is if you're willing to pay the higher prices, good luck getting the thing you want, right? I mean, with the supply chain problems, we hope the rail strike is resolved. It's not a done deal. It looks like it could be, but leaving that aside, people have had a devil of a time. Forget about getting cars, but a lot of electronic items, a lot of the PC market has been affected by this. That could be a problem. Even if you are willing to absorb the higher prices, good luck finding the item, right?
I think you're right. I think shortages are part of the problem right now. Some of that's caused by COVID, of course, and what's happened in China as they shut down plants and all the rest in the world here. But a lot of it's caused by the government. This is economics 101. I mean, you can't spend, as Jamie Dimon said today, you can't spend $6 trillion and not expect inflation. You can't overregulate the economy and have things work smoothly. Shortages and rising inflation, these are all the hallmarks of what happens when the government gets too involved in the economy. And I think that's really what's going on right now. At first, it started maybe with good intentions, as many things do because of COVID. And now it's just they got to let it go. and let corporate America do what we know how to do.
Yeah, and you know how to do it very well, Gerald. Thank you very, very much. Good seeing you again. Gerald Storch, Storch Advisors, the founder and CEO, of course, the former head of Toys R Us, a very successful head of that operation.